What's up, traders? It's Matt with Conservative Trades. Hope you guys are doing all right today. This is going to be a quick video. I've got some stuff going on over here, and really, I pretty much got stuck in the market all day today. This kind of to make a long story short, for those of you who are in the live stream, you can see that thankfully I ended the day down only $61.36, probably a little over $100 after fees and commissions. But for those of you who are in the live stream, you also know that at one point today I was down over $600. So again, this was just one of those days where I just spent digging myself out today. But I tell you what, guys, I think I'm going to rework some things here. And this is really what the video is going to be about. There's a couple mistakes I made today, and a couple takeaways from today. First of all, I got in way too early in pre-market, and I got in more so because I was basically trading 100% fundamentals. This morning was complete jump in super early in pre-market between 8:30 8:45 on just fundamentals. And now as traders, we do keep fundamentals in mind when we're trading. We do, when we're looking at stocks that are moving and there's heavy volatility on them during the day, and we're trying to capitalize on that intraday volatility, with the momentum in one direction or the other, whether you're short biased, long biased. I mean, we do look for fundamental news catalysts and that sort of thing. But still yet, as technical traders, we trade the charts. We trade the patterns. We read the price action. We watch the technical indicators. That's what this is about for us. 80% of our trading, maybe even 90% of our trading is the charts. It's the charts. It's the patterns, more so than it is the fundamentals, because we develop our strategies more so around the chart patterns themselves. And this morning, just when I came in and I saw how the S&P 500 had dropped again, the markets were down again with all the news and the coronavirus over the weekend and the spreading of it, and even the possible the rumors of a possible mandatory quarantine being issued upon the American people. I mean, there was so much going on this morning that and I just jumped in on a trade. Because why? I'm a short bias trader. and the S&P 500, the SPY was dipping, it was going down, it was going further, so I jumped in on CCL and ended up getting squeezed out. Okay? And then, and I was kind of stubborn with it, and I took it again at the market open after the halt, and I got squeezed out again. So that was my first mistake. I'll just cut it there. That was my first mistake. Really, I won't even address this other one as a mistake, but really, it was the market open that had me down roughly $600. RCL and CCL, as you can see right here. RCL and CCL, they were the two biggest hits that I took this morning. I could have traded both of them better. I could have traded both of them a little more mindfully, a little more cautiously, but I didn't. And one thing that I really got to thinking about, and I mentioned this in the live stream today, is it's very possible that right now, with just the way that the markets are, I mean, again, I've brought this up many, many times. We are facing some really historical moments right now. And day traders have never had to trade a market like this. This is brand new territory for every single day trader out there. That's why you can look and go, see some of your favorite day trading gurus out there have been having trouble with the market. A lot of red days have been recorded on a lot of day trading YouTube channels in the last couple of weeks. A lot of green days have been recorded too. And I myself, I had 3 green days last week. I had a $500 day, a $400 and some dollar day, a $700 day. But I had a couple red days too, underwater, and a pretty big one at that. And so, I'm thinking to myself at this point that just until things kind of blow over a little bit more, or just until the market seems to settle down a little bit more, one thing I'm thinking about doing is just kind of retooling my strategy a little, maybe not trying to trade the market open. Now, there's a caveat to that. If the pattern is just that perfect, juicy, grade A pattern that normally works out in my favor 90% of the time, then yes, I might trade it at the open. I might even catch the position in pre-market, not early pre-market, but later in pre-market, after 9 o'clock, when a little bit more traders are starting to come in, and they're also kind of jumping in and taking positions and getting ready for the bell. But it's got to be an undeniable setup. If I don't see that, I think what I'm going to start doing is I'm going to start waiting for the initial morning volatility to settle down, and then I'm going to look for the patterns. But either way, I'm going to come in and I'm going to trade the patterns tomorrow. I will keep, like I said, the fundamentals a little, out there. I'm going to be knowledgeable of what the news is and what's happening out there. But But like I said, if I don't see the perfect setup tomorrow morning, I think I'm going to wait until I do. So that's kind of my takeaway today, guys. And hopefully you guys are staying safe out there trading, and just be careful. Be careful. Again, nobody's ever been in these market conditions before, and they're tricky. They're challenging. So anyway, that's pretty much all I've got for you guys. And listen, I apologize if the microphone sounds a little distorted too. I've been having issues with this microphone, and I don't know. I may just need to get a new mic. But guys, hope y'all have a wonderful evening. Stay safe out there. We'll see you tomorrow. Take care.